Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the mini S&P 500 futures contract, front month in nature, looking at a last print of 1106, just above that very round and psychologically significant level of 1100, which has been kind of a fulcrum, kind of a key level as of late, although really we're looking at 1080, 1090, we're looking at 1110, 1120. Those are more technically significant levels. We'll look at that in a second, but from a psychological vantage point, certainly 1100 in the S&P futures contract is significant. Today's Friday, of course, the 19th of February, and it's been kind of dodgy a little bit. As you can see right here, and look at our proprietary indicators, you can see this was, of course, a holiday shortened week. What with President's Day, we had a nice surge in the late session of the previous Friday. And this, of course, is Tuesday. Had a beautiful session, actually. Had one thorn in the rose of the otherwise bullish session. And as you can see, we had a quadruple threat bullish bias. We had the trend was certainly up, the price technicals, and we had triple threat bullishness down here, save, of course, this indicator certainly suggesting the bears were in control. But nevertheless, overwhelming was the bullish bias. You saw this slight little shallow gap fill and then just a close beautifully at the highs of the day. Just a beautiful session. Market kind of took a breather on Wednesday. As you can see, we did start to see some divergences amongst our indicators. Still negative here, although diverging, of course, in the opposite direction was this indicator, but certainly diverging here, certainly diverging here. Market just ran a little bit of trouble. That's what I mean by a little dodgy. This, of course, was Thursday, the 18th of February. And again, just more bearishness here, more diverging here. The market was able actually to claw its way in the late session of yesterday, but just really, looking a little dodgy. The move's looking a little tired. We're going to look at a daily chart and see maybe why that's happening. Why is the market looking a little tired, especially when it comes to our proprietary indicators? Nevertheless, we come in on Friday. We get a bearish gap down, we do the gap fill, do the fake out move. The ES is always faking breakouts or breakdowns. Do the fake out move and just trail right up to the top to 1110. And as we mentioned, 1100 is not particularly technically significant relative to 1110, 1120, 1080, 1090. But as you can see right now, just mixed indications is the case. And of course, we're at 1105.75 on the market. So overall bullish, and as you can see, price has followed through on this bullishness, but certainly the market is looking a little tired. We're going to go ahead and minimize that. And this is a chart of the daily S&P 500 market. And this, of course, is our official market timing bias. And as you know, a few weeks ago, we did switch to officially bearish at 1091.76. The market is now at 1107. Definitely two closes above our very key measure of trend following support resistance and 1100 level right here. Certainly not the latter. Didn't really get the two consecutive higher closes above 1100, but certainly above the key measure of trend, 1097.45. We had a close of 1099.51. That was good. Ordinarily would be good for a switch to bullishness, but we do have this key Fibonacci retracement band right here, as you can see, 50% to 61.8. We're right in the middle of that band, so really we're just going to hold off on switching even back to neutral, much less bullish. Now, should we get a move to continue on Monday, certainly a break above 1120. Any move above 1120 will merit official bullishness, but right now we're just really going to see what this market's going to do. We're seeing a little bit of complacency coming to the market. We'll look at that in a second. But from a price technical perspective and a trend following perspective, the market is certainly bullish. We've actually gone to short-term bullish in terms of momentum. Directional movement has totally eradicated its bearish biases in both the short-term and intermediate term. The momentum, of course, is neutral in the intermediate term as well. So definitely just really holding on to this key fib zone to see if this is going to hold the market down, this 1110 to 1120 level. But over 1120, definitely bullish will be the case, and we'll see where the market goes next week. But definitely right now we're going to hold on to our official bearish bias. As we mentioned, it's kind of been a little bit dodgy over the last few days as this trend is really kind of tired out after coming off of this recent low and the test of the very key as we mentioned, the mother of all trend following support resistance measures, in concert with, again, the S&P loves 1040s and 1080s. Right off the 1040 level, boom, we've got a significant bounce, and the bulls may have overdone it here. If you look at, as we mentioned to you guys, from a contrarian perspective, the sentiment of the market, definitely looking at some complacency. The VIX is down around a level of 20. Equity call ratio is down around 79. As you can see, generally, when we get these moves right around here, right there, see, look, boom, sell off, boom, right there, sell off, boom, right there, sell off. And as you can see, the system alone, actually, we've added this to the rotation. We just simply coded it so that we could show you what we were talking about, and it's just a beautiful system. Actually, we'll just pull it up, just closed out another winner. And again, what's more, I did have some extremes in sentiment, but bought at 1066.50, but just closed that 1096.25. So for nice, beautiful 30-point gain. In this system alone, this is our SSVE, actually. As you can see right there, putting up another gain of $1,500. A couple of small losses, 600, 600, 1375 was the gain, but beautiful gains, 3275. If we take a look at the quick graph, you can see right there, beautiful graph. And the performance has been outstanding, 16,000 over the last 9 months, with just a $1,200 max drawdown. So that's one of our new systems that we're actually rotating into the mix. We're actually going to look at a couple of the others of our. We've coded some. We're not going to look at that. Some new systems. Here we go. So this is, of course, the Swing System 10.0, as we've mentioned. Beautiful system. Swing System 11.0 R is a new model. As you can see, looks pretty good. Has some nasty drawdown, but that's why you got to have a diversification. And as you can see right there, the 12.0 R, beautiful uptrend. Of course, non-optimized and non-curve fitted to ensure that these systems are going to continue to perform. Beautiful. Making a new high right there for 13.0 R, 14.0 R swing system. Beautiful equity curves, but nevertheless, a little bit of drawdown, but very key to be diversified. And a new day trader. Day Trader's 26.0. Kind of been waiting for this one to take a trade. It's had 2 winners, 1 loss. Hasn't really traded over the last couple of weeks while we've been monitoring it. But nevertheless, if we pull this up, if we pull these new models up, as we mentioned, 11.0 to 14.0 to 1 day trader, and we take a look at those. Now this is assuming slippage of $15 a round turn and commissions of $6 a round turn, I believe. And we go ahead and generate that report. We can see that the systems in concert. This is going to be a new portfolio, actually, a $50,000 portfolio or a $25,000 portfolio. It's going to be swings with day traders, and as you can see, $14,000 in slippage anticipated or factored in, $4,800 in commission over the last 4 years has made $145,000. And of course, the maximum drawdown's only been 28.26%. We're really running out of time here, unfortunately. 28.26% has been the maximum drawdown, really trying to limit the drawdowns. We do still have our very aggressive portfolios, as you know, but just really wanted to develop some new methods. We do that about 2 to 6 new systems per year. And this is 5 new ones, which should be very impressive, and certainly you can get a great rate as an introductory offer there. Nevertheless, looking at our existing stuff, here's the MFX Lite gaining a huge $3,000 on a $10,000 portfolio today. 30% essentially for the MFX Lite you see right there, 28.68. That's today, and this is on the heels of Tuesday's meteoric rise of 40% in just one day. This is for the MFX Lite, 40% in a single day for the MFX Lite. Now, you can either subscribe to this portfolio if you are interested, up to 10 mini contracts or just 5 of the typical standard contracts, which is what we're looking at here. But if you're interested in our futures portfolios, you can... this is how we've done over the last 4 days for our futures portfolios. Again, let's see, the Delta B has been the outstanding mode. But any portfolio over $25,000, for instance, MapDT version 4.0 HR, it's made 10% this week, 4 days. You'll actually get an MFX Lite portfolio free. So you subscribe to a discount in our video promo code for the MFX Lite, or you get it free with the purchase of a MapDT version 4.0 HR, any $25,000 portfolio. If you guys have any questions, go to the website, chat with the support team, or shoot us an email to admin@MiniAnalyst.com, and we will see you next time.